so in the vol space in crypto, big shift higher in realized and implied vol, as you would expect given the size of the moves. So we saw since this time last week, big shift higher. Now the implies did start to correct faster. The implies are back down, fading about half the move as profit taking came in. But 10-day realized on Bitcoin got as high as 55%. And then we saw ETH didn't quite manage such a big spike. So we've got that unchanged realized on the week, on the 10-day, back to around 42%. As we said, ETH kind of getting a bit more stuck around those long strikes. Short dated implied vols did get into the 50s again in Bitcoin, but like I said, they faded as we rejected that 31K area, didn't really manage to stay above it for very long. Profit taking on call options came in and drove that vol lower pretty quickly. And then implied vols on ETH are almost back to unchanged on the week. They did have a smaller spike to start with, but they finished the week only up a couple of points, whereas Bitcoin was like up 4 points on the 1 month maturity. Carry did flip into negative on Bitcoin. It started the week positive there. It's been negative all week. Basically, so that's saying realized vols are higher than implied because implieds are corrected and realized are still hanging up there with those big moves being captured. And then ETH carries pretty much back down to zero, but that's been negative for a couple of weeks now because ETH implied vol is trading a lot heavier because there's less buyers of it, basically. We would expect some fresh supply to come in and take implied vols even lower after expiry because there's obviously a ton of upside open interest and stuff like that. So it may well free some people up to sell more vol, and there's just that systematic nature of weekly selling that we've seen. And then we think realized vol is probably going to fall this week as well, as those big expirations kind of keep the markets stuck to various strikes that kind of need contending with, let's say, particularly in Ethereum, because we know the street is likely long that Ethereum gamma. It does look like Bitcoin is the opposite and the street is short that, but we often tend to find that even if the street is short, if it's a big enough strike, it may well still act as some gravity, basically, right? So I wouldn't be surprised if Bitcoin hangs around that 30K area and ETH kind of hangs in between 18 and 19K for the rest of this week. And we see those realized numbers come back down and take the carry back to positive at some point. Okay, so that's what we're seeing in realized vol. Now, if we look in a bit more detail at the term structure, we can see that on the week, we've got about a parallel shift in Bitcoin. It doesn't really tell the full story. We did have a bit more of an inversion like that, but that's collapsed back down. So it looks like more like a parallel shift week on week. ETH, you can see the front end as well, higher, back end not really moving too much week on week. So that's kind of how we've ended up. So a slight inversion compared to before, but we are still in contango structure in terms of ETH, given the lower realized that we are seeing. The big change though is what's happened in the ETH Bitcoin vol spread. We can see that has shifted down materially. It was already zero or slightly below zero, but now it's just gone. Now it's just fallen through the floor, right? So you can see here, -5 is an area this doesn't really tend to get to very often, and we are kind of there across all the maturities in the front end of the curve are kind of between anywhere between sort of 2 and 4 vols under, which is pretty interesting. So, sorry, 3 to 5 vols under across the curve now, which, I mean, it's unheard of really, right? I mean, and if it happens sort of momentarily and then it reverts really quickly because everyone's like, oh, I'll buy that spread all day long at negative. That is not the case anymore, right? People are looking at that spread saying, yeah, ETH just isn't moving and Bitcoin's a madman. I'm not confident anymore at owning that spread of flat, basically, let alone. So that's what we've got going on. We can see the realized vol 10-day is around 7 negative, 30 days around 2 negative, and that explains why the whole curve is shifted down, and that's what we've got going on. Now, it might be a case of, like I said, a narrative comes out of the blue that is ETH specific, and we suddenly see ETH come alive, and that could flip the vol spread back. But right now, you wouldn't really want to stand in the face of it and have a big position on that vol spread, right? And that's what you wouldn't be putting fresh risk on necessarily on that spread, given the state of the market and given what the narrative is that's driving things. All right, and then looking at SKEW, Bitcoin SKEW has been in deep call premium all week. Obviously, that's understandable given the moves and the consequent flows on the call side that we've seen as people chase the market. Now, calls are around 3 vols above puts in the 25 delta across most of the curve for Bitcoin, with the back end going even higher to around 5 vols. ETH SKEW also flipped into call premium last week, about 3 to 5 vols, but has started to fade and to a more neutral level. So we've got the front end, the weekly SKEW back to 1 vol for puts as of midnight last night, and the rest of the curve is still in call territory, marginally, with the back again having the higher call premium. So it really is those long end calls that have got a lot of premium because the market believes in crypto and believes that by the end of the year, crypto could be materially higher as things are starting to turn. Now, crypto markets have completely decorrelated from stocks, right? Or even gold. So if you look at how they've been behaving, it's this adoption narrative that suddenly took hold. That's what's driving things. And that's why I think this call SKEW is now going to be quite persistent for particularly in the long part of the curve. Because that's like, if you're going to get the adoption, it's happening over the medium term. So over the medium term, I want to own calls because the adoption kicker is going to help me, right? So that's the mentality. So even if you get short-term pullbacks, I would expect them to impact the front end SKEW, but I would expect the long end SKEW to really hold a strong call bid because of this new adoption narrative that is coming through that I don't think is about to disappear, basically, right? So that's the idea. Yeah, and I also think as implied vol settle down, because implied vol has obviously popped a little bit. If implied vol comes down, that's going to make upside calls look even cheaper and even more attractive. So we think that's going to bring in more call demand for people who haven't already bought calls and chased the market higher. They'll be looking at it going, well, you know what? I agree with the adoption story. Calls are getting cheap. Why don't I stick some upside on the book, basically? Right? So those are things that I think are going to support the call SKEW going forward. Looking at the dashboards, these are back. Obviously, they were broke last week. We got them back up and running. We are in buy put territory on the strategy compass here because it's saying things are a bit overbought. But bear in mind, they've already been reverted from up here over the last week. We've already got back to here. So I think we're more like just kind of settle in at 30K personally. I wouldn't be rushing out to buy puts here at 30K. And then ETH, same story. It's kind of reverted even more, I would say. It didn't get as overstretched on the upside. So for me, I'm steering clear of buying puts right now. I'm going to let the market digest these moves this week. And I'll let you know what trades I've been doing in a minute. But basically, not chasing puts, not trying to fade this move. Okay, in terms of option flows, big explosion in Bitcoin, double the weekly volume that we're used to seeing, $7.5 billion approximately trading in terms of notional. Shorts being covered on the upside. We see a massive amount of June calls. All these purple bars are all big June call activity between 30K and 35K strikes. Some calls are getting rolled up, so via call spreads and things like that. Profit taking being seen across the curve as well. So July and August in particular, this 34 to 36K area, these arrows that I've got here, people taking profit on screen and in blocks on those. Fresh long exposure entered into as well in December calls. So that's these yellow bars here. People buying the 40K strike in December and the 35 versus 45K call spreads. And then lastly, there was a little bit of put buying late into the weekend as people trying to fade that pop to 31K. So some opportunistic put buying, but that was dwarfed by all the call activity. So it's pretty minimal, I would say. Okay. In terms of Bitcoin, in terms of ETH flows, much less of an increase in ETH volume. Obviously, spot not being as exciting, but just in general, that wasn't where the activity was. Short day call buying was still there, though, for whatever flows were there. It was generally short day call buying, 18 to 2,000 strikes in June. We did see some straddle selling of the 1900 straddle. That's a bit more systematic. So that kind of prevented the vol from really exploding, I would say. We saw some rolling I don't know if it's rolling or fresh calendars, but basically some June 2000s versus 7th of July 2050 call calendars. So these are pretty out of the money calls now, low premium, but basically someone saying I would rather own next Friday higher strikes than own this Friday 2000s. So for me, that's leaning on the idea that you're bullish. You don't think the market can break away from these long strikes this week. But once the pin goes, the market's got room to fly and catch up with Bitcoin. That would be the logic that would make you want to do that type of calendar, in my opinion, right? If you were a really strong believer that the expiry pin is having a disproportionate impact on ETH, and once that goes away, ETH has got some upside in it, right? So that'd be what you would do. We're still seeing some sellers of September Vega, but nothing too dramatic. And then some March 24 call spreads. There's that long inflow to buy again, 2,000, 3,000 strike call spread. That's these bars here. Someone buying those as a bullish expression, basically. Okay, so those are the flows. Looking at the gamma profiles, we see that, you know, we mentioned last week that both BTC and ETH had opposite gamma profiles. So we've seen gamma go lower, more negative on Bitcoin. We've seen it go positive on ETH, right? So that's continued to push in that direction. We've got this monster short strike here on the 30K on Bitcoin for this Friday. So we believe that is the main driver. And just like we got this big spike in short gamma last Friday on Bitcoin, we're probably going to see the same thing happen again if the market is sitting near 30K on Friday. And then ETH, you got these big strikes here. Like I said, 18 and 19K long strikes. And once they expire, that's going to leave ETH a lot more clean positioning wise. So I'm very interested to see if ETH is going to have a bit of an explosion of a move that's been suppressed up till now. It's not a no-brainer that it will, but it definitely will be freer to move. But I think it needs a reason to move. But if it's given that reason, then you could see some fireworks on Ethereum because the expiry is going to be like a bit of a unclenching, as they sometimes call it. When something's pinned and the expiry goes, then the thing can just do what it wants to do. Okay, so that's where we are in terms of gamma positioning and what we've seen this week. What have I been up to? I've been quite active, actually. Okay, that is it for this week's Crypto Options Weekly. Thanks for listening. Catch you all next week. Cheers.